they had like 300 grand of ad spend. It was a huge GST things, making sure like your GST on your Facebook and your ad, like the ad platforms is being accounted for correctly. If you don't put your ABN into Facebook, so you don't get the claim. And I've seen people do that. They assume, well, the bookkeeper doesn't really know anything about Facebook, assumes it's an American company, goes GST free, but then the client hadn't put the ABN in.
If you do put your ABN and you are GST registered, they don't charge you GST. If you don't put it in, they do add you GST. It's not clearly explained to anyone.
That's kind of why you have to look at the tax invoice, which is also really hard to find in the Facebook world. So we had to go back and like amend all the BASs and then get that refund.
Hi, and welcome to the Bright Minds of E-commerce podcast. I'm Dana, founder of Bright Red Marketing, and I created this podcast because I wanted to bring you the best advice from Australian experts in e-commerce and e-commerce store owners. If you're wanting relatable stories and actionable advice, as well as the latest Facebook advertising strategies, you're in the right place. So let's get into today's episode.
Hi, and welcome to the Bright Minds of E-commerce podcast. Today we're here with Jaimie from Bloom Money. Welcome, Jaimie.
Hi.
It's so good to have you on the show. I think last time we had you on the show, I ended up changing accountants. So that's how good last call went. I'm hoping someone else gets just as good advice as I got last time. So let's dive in. We are specifically here for this episode to talk about sort of having that best financial year yet. If someone is running their business and they're like, this is the year, I really want to, not just have a good business year, but financially be really sound. What are some things that people can do to sort of make sure that they're running their numbers properly and focusing on the right things?
Yeah, I think with a lot of e-commerce owners that I have worked with before, a lot of them focus a lot on Shopify and like the financial numbers that are in Shopify. And yeah, while they're all super important and there's a few important kind of metrics in there to be tracking, I do think we need to kind of bring it together with Xero and kind of be looking at the whole picture. One of the things I get from clients like multiple times is, that profit and loss isn't showing what's in Shopify, like they're different. So I think actually understanding why they're different is like a really important one, because like not all that's like a higher figure. We're not including fees and GST in that number. And like, so what you're looking at in Xero is more like a true reflection of your revenue.
Very interesting. What do you think usually are the biggest differentiators in that? Because I have never had a client give me profit and loss from Xero. It's always numbers based off Shopify. So like, let's go into that a smidge, because I think that's really interesting.
Yeah. So why are they different?
Yeah.
So it's giving you the actual number like the customer is paying. So that will include like the GST if there's GST applicable on it. Shopify doesn't actually have access to a lot of the fees, like the PayPal fees or the afterpay fees or anything like that. So it's literally just telling you how much the client has paid and doesn't actually take that other stuff.
And then you're trying to work out profit margins to try and tell someone like me how much profit you're making, and then they wonder why money is not matching up.
Yes.
Right. Does Shopify make it easier to integrate into Xero?
It's pretty, you kind of usually need a connector up.
Yeah.
To make it accurate, especially if you have the afterpay and like all the different payment types.
Yeah.
The best one I've used is A2X.
Okay.
Because that one can it kind of connects everything. And then you can like really choose how it feeds into Xero. And you can also turn on for extra, like a cost of sales function too. So every time it posts a sale into Xero, it can post the corresponding cost of sale into Xero. So you can put like the landed costs into Shopify and then it can feed through A2X to push it into Xero in real time. So then you have like a really like a true gross profit in there.
Yeah. Okay. That's really interesting, because I know that that's something a lot of business owners really struggle with in terms of trying to find out like those landed costs and then the profit margins that are actually their true profit margins. Because obviously there's like cost of good margins, but then there's at the very end what that actually looks like. Okay. So if people are setting that up, I know the biggest thing I learned from you in the last episode was around that sort of stock management in terms of like cash flow. Like they've obviously gone and ordered tens of thousands of dollars worth of stock, sometimes hundreds of thousands of dollars worth of stock, and then they have really bad cash flow months. You have a really interesting approach to that. Can you please explain how that works for those listening so that people can stop freaking out about really bad cash flow months when that's not actually what's happening as a whole in their business?
Yeah. So I think there's two types of reports in Xero. We've got like our profit and loss, which shows our revenue and our expenses and gives us our profit. But then we also have a separate report called a balance sheet. And that's where our assets and our liabilities sit. And our assets is our inventory. So an inventory doesn't sit on a profit and loss. It sits on a balance sheet. And then those two kind of put together is your cash flow. It's everything. So when, we're worried about cash flow, it's not like affecting our profit. So if you're buying stock on June 30 for the deduction, you're not going to get it because it doesn't sit in a profit and loss. So that's, sits over on the balance sheet. And then every time you're making the sale, that like one stock item that you sell then moves from our balance sheet into our cost of sales section to recognize the expense. So then that way we're getting a really accurate profit and loss, and a profit and loss is like the picture of like a period of time. So how that month has gone. Yeah. So we have an accurate thing of just sales of what we've sold and the cost related to those sales that we've just sold, which again, not cash flow, but it is a tricky thing to manage the cash when you are doing that. And honestly, like cash is king. So we need to, like, I feel like it's really just fold because their stock management isn't right. Like they've put too much money into stock and the stock's not moving. So then what are you going to do in that meantime? Like you have to pay wages, you have to pay ads. And if you can't, you don't have those credit lines, or just have a plan of how you're managing that.
Yeah.
It's,
do you have any tips around that? Because I know that's something a lot of businesses really struggle with in terms of going, okay, well, I still have stock that's not clearing, but I know I need to start placing orders for things in the future. What are your sort of strategies or tips on trying to manage that in the best way so that you do have that cash flow when you need to get stock, but you're not sort of overextending yourself too much?
Yeah. I mean, it kind of depends on the risk profile of the business owner too. Like if you're a little bit more risky, happy to take the risk or like get the funding. Sometimes like not all debt is bad. And I think if you are going to be like spending money to make money and you are going to make the money and you're confident in that and happy to risk that. There are like, I think there's even Shopify that fund inventory stuff now, like PayPal fund inventory. And it works kind of well in that every time then you sell the stock, they just take a percentage.
Yeah.
So what I've done with clients before is kind of build that percentage into their sell price. So we have that, we have the cost of sale, and then we've built in a part for the overheads and then a part for the profit, obviously, like that we need too, and the tax. So we're kind of like building the price backwards based on like we need 10% for GST, we need 3% for fees, we need 20% to fund the inventory. Yeah. And then that way, that kind of builds a good cash flow too, because you kind of paying down the loan and then you kind of, and it kind of just helps put all that together. Yeah. I do think e-commerce is like one of the most complex industries from an accounting perspective, because a lot of them are buying stuff from overseas. So you have like FX, you have like stock management, inventory, like you've got all the things, all the accounting things that are really quite tricky.
Yeah. And I think that's maybe where people are getting stuck, is maybe they don't have accountants that know these things. So like stuff's just kind of getting reconciled by the business owner because they don't really know where things go, and they're like, well, I made so little money this month because my profit and loss is so bad, and then they freak out they don't have cash, and you know, it's all just sort of accumulates if you don't know the inner sort of details and workings of that, because it's just so complicated.
It is.
So like having that really good system that you talked about and having it all mapped out, I think is really, really helpful. So I'm going to say, if you're listening to this and you're like, that's not how I have it set up, maybe start asking some questions.
Yeah. And a lot of accountants, if they're just trained in tax accounting as well, like they only really do the tax accounting. So they're kind of assuming like what you've got in your Xero file is just like ready for them to process their part of it. And there's no Like, and in most small businesses, there's no real need to make adjustments for things like prepayments and things like that, because a lot of businesses are just small businesses, start on like a cash basis. So there's no need for all these crazy adjustments, because it requires like a whole different level of skill and a whole like lot of time, and people are just trying to like, you know, minimize the accounting fees. And so I would even get that system set up by someone if they don't have that skill set.
Yeah, for sure. I mean, even something that you said in like working it backwards to work out price, I feel like a lot of business owners don't do that, because not everyone, a lot of small businesses in eComm start just them and me, myself and I. So you don't really have anyone to go, okay, so you go, okay, well, here's how much it cost me to land, and I put a 50% margin on it or 100% margin or whatever it is, and then go out into the world and never really look at their pricing again. So I think like some of those things that you talked about in terms of pricing, is there anything, or like off the top of your head, what are those things that go into calculating that price as you sort of grow and scale?
Yeah, like I think a lot of people, when they're just testing the water or starting out, they're like, oh, I won't pay myself, like I'll just see kind of how it goes. But I think like building in, if you're like, well, I want to get paid 80 grand a year, say 80 grand, divide that by 12 and go, I need to make this much per month.
Yeah.
And then go one step further and go, okay, well, my average sales at the moment are like 200 sales per month. So I need to go like whatever the monthly amount is, what is it, 4 grand, 5 grand, divided by 200 products. So I need to make this much for myself in every sale. And if you're like, wow, that's not achievable, either you need to sell more, or you need to say, okay, well, this business isn't viable. I can't actually make enough to cover all that stuff and pay me like, you know, a decent amount that I want to be paid.
Yeah, I think a lot of people go into it with, oh, I'll just get to that later. But if you never actually go and do the math, it's very hard to come back later and be like, where do I get paid in this?
There's the maths. Let's map the maths.
We need the math to math. We cannot go math this out of it being broken. Talking about tax and those sorts of things, are there any sort of deductions that you see easily get missed? Obviously, we're filming this in end of July. It's a good time to start being aware of what things you can claim for next year that maybe aren't as obvious. Are there any kind of deductions that you think are really good in that e-commerce space?
So, yeah, I guess one of the misconceptions would be the stock, like get thinking that that's a deduction and it's actually not. So we'll do like a stock take at the end of June, and whatever you still have on hand, it's called added back. Like it's added back into your tax. Like you don't get any kind of deduction from that, even if you're coding it to an expense account. So the accountant takes that because it's not an expense and puts it adds it back. So there's that. And I guess super could be one. Like if you're paying super late after the due date, I guess now it's harder in this financial year, but last, if you pay super late, you do not get a deduction for it. So that is like an easy one that you just assume that maybe is there for the April to June kind of quarter, but it's, if you pay it late, then it's not. It gets added back again. One of the ones I kind of see just blended in and sometimes missed is the fees, like I was talking about before. So if you are kind of just not using a connector system, basically whatever lands in your bank account is being coded to sales. But if you think the fees, like it should have been a gross amount, then you deduct the fees and then you have the sales. So like the fees usually, not PayPal, but the other like Shopify and Afterpay, they have GST on the fees. So you kind of could be missing out on that credit for the GST if you're just kind of recognizing the lower.
Yeah, if it's just pulling in the like final numbers, you're missing out a whole bunch of GST claims.
Yeah, I see that one a bit. And I guess getting your the GST, I think it's probably less likely now, but making sure like your GST on your Facebook and your ad, like the ad platforms, is being accounted for correctly. Like I if you don't put your ABN into Facebook, then you don't get, so you don't get the claim. And I've seen people do that. They assume, well, the bookkeeper doesn't really know anything about Facebook, assumes it's an American company, goes GST free, but then the client hadn't put the ABN in. So then
they are being charged GST.
Yeah. And in this case, because they had like 300 grand of ad spend, it was a huge GST thing. So we had to go back and like amend all the BASs and then get that.
They make that so confusing because it comes up and it's like, do you have an ABN? Do you want to pay GST? And everyone's like, I don't know. But if you do put your ABN and you are GST registered, they don't charge you GST. Don't put it in, they do add you GST, which I understand now that I know how it works, why it works. But it's not clearly explained to anyone.
No, it's not. It's not. And I mean, that's kind of why you have to look at the tax invoice, which is also really hard to find.
And it's also poorly explained even on that. That's like, why did I get charged 10% extra that I didn't think I needed to be charged? And chaos. Yeah. That's fascinating though, because that could be huge for some businesses not knowing which way it goes.
Yeah, definitely.
But then if they're doing it wrong and claiming GST on something it's not got GST because they do have their ABN in there, different problem.
Yes, that's a different problem, but still a problem, definitely.
The ATO will still be mad at you. I mean, you sort of touched on it a little bit in the sort of tax deductions, but is there anything else that people are sort of claiming wrong or just sort of you see big problems with being an e-commerce business? I mean, we've touched on a lot at this point and my brain already hurts, so it's good.
I think FX would probably be another one, like foreign currency, because a lot of people are buying stock overseas and maybe not using the multi-currency Xero subscription because that is more expensive. So that kind of like there's a benefit in that. Like you could get gains and losses that you can then use in your profit and loss to get like a deduction because that's going to flow through to there. But if you're not recording it and using that function, then like it's just your best guess and you're converting back to AUD every time you put in a payment in.
Does that apply to like international subscriptions and stuff or mostly just like purchasing stock?
No, it would be anything. So if you added a USD invoice for anything, it will kind of like work out the FX rate on that date. And then when you actually go to pay it, then it will work it out on that date and you'll make like a gain or a loss on that.
Interesting. I mean, we sort of talked about numbers and like knowing how things are calculated. And I think if anyone's gotten to this point, if they don't have all this set up in Xero, they're going to go do that because you can't listen to this and go, oh, I'll just leave it. Like this is big stuff. I know that if you had all that set up, this next question would be easier, but let's assume they do or do not. Black Friday is coming up.
Yep.
Biggest sale of the year. Everyone's prepared for it, whether you're a consumer or a business. I know people are already starting making their lists of what they're going to buy as Black Friday. Like people hold out for Black Friday. I do also know that a lot of businesses go into Black Friday having absolutely no idea how much they should go on sale, how much they can afford to go on sale.
Yes.
What are your sort of best tips around knowing that? Obviously your numbers have to be to know these things.
Yes.
But considering that, what are your sort of best tips to know how profitable you can be?
Yes. I would probably say don't just randomly decide what you want to do based on like what other people in your industry are doing or what you saw worked well last year for somebody else. Or I think like going into Black Friday and just guessing could make you lose at scale. I would just not do the sale if you think that you don't know these numbers. I would do the numbers first, or get some help with it even. Just like get a basic spreadsheet, work out like what your landed cost is. You need to know what that is. You can't really do the sale without that because you need to know what like your gross margin is already on a product that you're selling. And then you're like, what have I got to work with? Do I only have like 10% to work with because then I'm going into a loss anyway? Look at what you're kind of selling. Just do it on a normal month, your normal month of sales into an Excel spreadsheet and then go, okay, well, what would this look like if I did free shipping? So take out all the shipping revenue and then compare that against your overheads. Are you covering them or like how's your cost of sale look? Because you also probably got to add in extra spend because you might be spending extra on ad spend.
Yeah.
And I mean, hopefully that pays off like your ads per like sale, but I've heard like last year, I know it was probably like people kind of said that ad spend was a little bit higher. Even if you just did free shipping and then you're like, okay, that doesn't work. What if I do 20% off? What if I decrease all these sales by 20%? How does that flow through to my next?
And there's a really clever way of doing it, because I think it is something that people find really overwhelming. And it's very like, I don't know. My crystal ball is in the shop and broken. Like, I don't know how this works. So I think being able to go, okay, well, let me just take a random month, even last month, and go, okay, well, what if I did this? What if I did this? You know, what if we doubled the ad spend? I mean, if we assumed we doubled the ad spend and the results from that doubled, that's, you know, you can check that in your spreadsheet and go, okay, well, if we did that, what's that look like? That's I think a really actionable way of doing it, because oftentimes it's very like, we're guessing. And like, this is still guessing, but it's guessing off real numbers that you can actually go in and change. I really love that.
Yeah, definitely.
What are your thoughts on if like stock is not clearing? What's the sort of financial accounting perspective of how much of a loss we make on things to just get the cash back in the business? Because as you said, it's not really a deduction if it's just sitting there as sort of dead stock. Is there sort of a strategy or an approach to that makes a bit more sense?
I guess it depends how old the stock is, and if it's like going to go, you know, clothes that are going to go like moldy if you're literally not going to move it. What I would probably do is make it super cheap, but pair it with a different strategy of like either like opening yourself up to like new clients. So obviously I'm not in marketing, but I would pair that with a marketing strategy. Yeah, I'm going to lose, you know, 25, 50% of the value that I paid, but I'm going to move it. And then I'm going to be able to like tap into these new clients that might be more interested.
So almost like take it as marketing expense at that point and go, well, if I can clear it really cheaply, let's call it a marketing cost. Don't know how you reconcile that. But call it a marketing cost, clear out the stock that's not selling, use it as sort of a technique to grow the business in a different way. But just know that it's maybe not going to be as profitable at that point in time. But then from our perspective, we look at that and go, okay, well, if you lost money on that particular order, maybe they'll come back and buy something else again.
Yes.
And then it's a good thing.
Like a loss leader.
Yeah, we like those. Now, I know a lot of people that get into e-commerce. I mean, you know me, we're data nerds. We're not numbers nerds. That's why you get a million emails from me. Not a numbers person, can do data. When people are looking at these numbers, a lot of the time it can get very overwhelming. A lot of times sort of keeping track of that cash flow during these sort of high pressure periods is a lot. There are some people out there that tell people to track on a daily basis. My personal opinion is that's maybe a little bit too intense and a little too stressful for people. When you're in one of these like really high pressure sales periods, cash flow is obviously important. We're spending more, we're doing this. Do you have any strategies or techniques for people to keep a really close eye on those sorts of things in those sort of like crunch periods?
I would say probably, if you have all these automations kind of set up correctly and you have your system working, I would like just come back at the end of the week and check your profit and loss, because you can nearly get it reconciling automatically, especially in like with all the reoccurring things and the automations to connect Shopify into Xero. Then that can basically auto rec by itself. And then all you have to do is jump into Xero and run a profit and loss. That takes 2 seconds and you can kind of say, because after a week you can be like, oh, well, actually this is going up too much. Our margin's decreasing too much. I need to pivot. And you can pivot before the month is over.
I wonder if that's actually a really good justification for getting your Facebook ads payment thresholds to be lower, because I know a lot of people try and get them really maxed out. It's like, I only want to pay my Facebook bill like once a month or like once a fortnight. But I wonder if in those high crunch period times, it's actually better to have them more frequently, because if you are scaling and you are spending a bit more on, you know, meta ads or whatever, then you would usually, at least then that number's coming into your profit and loss as well. And you go, cool, well, we spent 5 times as much on Facebook than we normally do, but let me see what those numbers are doing across the board.
Yeah.
I really like that.
In big e-commerce businesses, where there's like investors involved and we're doing the finances, like they will ask for a mid-month update as well. So like we will do month-end reports at like the end of the month. We'll close everything up, but we'll also do a mid-month. So they have like an estimate and a forecast, and they can, pivot at those reports, like, and all the investors get that, and they can all it's really important in that level. So I don't see why it's not important in a smaller business to try and get to the bigger space.
Especially when you're trying to grow, and it is that cash flow thing of going, okay, well, I know I've got to be saving for stock. I know I need to be investing in this. I know I want to be spending money on ads. I know I need a new website and I need to get some this done, and I want to do all these things. Being able to keep a really close eye on that and know that those numbers are correct.
Yeah.
Because that's the trick. Because I know a lot of business owners that are just hanging out on Shopify and taking that as everything. And I think that's where people get into trouble, because they're like, oh, I didn't see all of this. That's then coming to bite them in the butt later. Or they could have been so much more profitable, but they didn't realize, and then they don't scale as fast as they could have, which is sometimes just as sad, because you're like, we were doing so well. We could have done so much better.
Yeah.
Look, before we wrap up, are there any other sort of tips, tricks, strategies that you think are really helpful in the e-commerce space?
I think it's like just really important maybe just to even have that one-off session with your account. And if you can, just so you kind of know what's on the profit and loss, what's on the balance sheet, where to look for them, how to look at them. And then, because it is one of the most complex industries for sure. So there's so many like things that can go wrong or hard to understand. And it does seem pretty and easy because Xero is pretty and easy. But yeah, it can, last thing you want to do is be paying like too much tax as well. So I think it's just important just to know those checks and check in on it.
I mean, I know even just in my calls with you, and obviously my business is much simpler. I've just learned so much about the back end of Xero that I had no idea of. So, I mean, on that note, if people want to reach out, they want you to have a look at their numbers after this, what's the best way for people to reach out?
Yeah, so we're on Instagram, bloom_money, or you can just email us at sayhi@bloommoney.com.au.
Wonderful. Thank you very much. Moving into the last couple of questions. Do you have a favorite business book or podcast?
My favorite book that's helped me in business and all around would probably be 7 Habits of Highly Effective People.
Solid recommendation.
I love it.
I'll give you that. The best piece of business advice you've ever heard?
Either when it comes to like running the business would be like a fail to plan is a plan to fail.
And very relevant to this episode, to be fair.
It is.
Like, if you don't know what's going on, you can't. I like it. Well, thank you very much for joining us on the show. It's been a pleasure to have you, as always.
Thank you so much for having me.
Thank you for listening to the Bright Minds of E-commerce podcast. As always, you can find the show notes on our website at brightredmarketing.com.au. Just look for the podcast page. Thanks for listening.